Okay, this is Rhonda Thomas for Financial Accounting. And this is our last video or next to the last video. I don't know whether I'll do one or two, but we'll see how long it takes us to do these. So here's where I'm at. I am in Canvas. Okay, and I'm in the modules in Canvas, almost to the bottom. There's a module called Cengage Project, chapters 1 through 5. And I've already got two videos ready to go for you for problem 4.5a. Okay, we're going to do problem 5.4a and problem 5.5 today in class. And I may make one video for both of them, or if it seems like it's going kind of longer, I'll break it up. Okay, or if I don't get to the other one, we'll just take it as it comes. But I got a little bit more to do for the videos on this, and then that should be good for those. And I've got some Excel spreadsheets, okay? These two here, the T account pages for Cengage problem 5.4, I can't say the words. T account pages, Cengage problem 4.5a, that's the T accounts. You'll see me use them in the video. I would download it and use it in Excel, or you can print them out. And I'm going to give the ones that are here in person a copy of those. And then there's the period in spreadsheet. So you would just download these onto your computer. Okay. And I'm just going to go ahead and download them anyway, so I can show you how, make sure everybody knows how to do that. You just click on and see the little paper clip, right? The little paper clip indicates a file, and you would just click on it and save it to your desktop or wherever it is that you normally save things. All right, and now I'm going to go into Cengage to the project itself. And this is due Saturday night at 11:55, and it is worth 200 points. So that's twice as much as an exam. But I was just telling these guys that the nice thing about the project is you can work some in it and then go back in later. There's not a time limit other than it has to be done by Saturday night. So here's where we're at. When you open up the project, you're going to see three problems. Okay, one is from chapter 4 and 2 is from chapter 5. So everybody see these. So I have done a video over this one, two videos actually. And you say, what are we doing in there? We're gonna, yeah, we got quite a bit to do. I know, but if you'll walk through it with me with my video, I think you'll do just fine. And this is really going to take you through all 10 steps of the accounting cycle, which you should see all of that. You should have good exposure to what all those things are. So the one I want to work on tonight is this one, 5.4a. Okay. Chapter 5 introduced us to inventory. Okay. Before chapter 5, we were using earned fees for our revenue. But now that we have inventory, there is a whole different group of things we need to know. All right. So here's what we're going to do. I am going to open up my spreadsheet that I downloaded, and I'm going to give these guys a physical copy of it. So bear with me a minute. There's the one I want. So I'd like for you to try it. I'd like for you to try downloading that Excel file onto your laptop, if you would, please, because I want to make sure it's working, and I want to make sure that you get what I'm getting, because sometimes, you know, that's not the case. Okay, so you say, what's this? What we're going to do is we've got 4 pages of T accounts for a seller. And then we have 4 pages of T accounts for a buyer, right? Now, you're not going to use every one of those accounts, but when you have a chart of accounts sitting in front of you, you never know what you're going to need. But the good thing is, whatever transaction happens, in the problem, there are no new accounts to create. Are you with me? I didn't get that list of a chart of accounts. So I think they're doing a good job giving you a list of chart of accounts. So I just want to kind of audit what I've done here. So here's what I've got. I've got the seller accounts first. Okay, the seller accounts are first in the tabs down below. So if you're not real familiar with Excel, if you'll watch up here just a little bit, okay, we're going to double check that I've got all of the chart of accounts on here that we need. So before we do that, I'm going to pass these out to you guys. Okay, so these are physical copies. Doesn't matter to me if you want to print them out and just write in them. That's fine, but you'll have to do the math with a calculator or Excel or whatever. If you want to open up Excel and put stuff in, and then you can use the functions of Excel. You don't have to do all that math on your own, you know? So I know it's hard to learn a subject and learn software at the same time, but I'll tell you, I'm not an Excel guru. No, I'm not. I can do what I need to do, but I wouldn't have been nearly as, wouldn't have found out how good Excel is if I hadn't started working in accounting. Because I think I've told you over and over that I don't even have an adding machine anymore. I used to do an adding machine really fast with my right hand. I don't do that. I just throw it on an Excel spreadsheet because I like seeing what I just keyed in. And unfortunately, an adding machine, sometimes I hate looking at adding machine tape, trying to figure out what did I not put in right. But you can look at an Excel spreadsheet and go, what? So I know there was a time that when I was designing some spreadsheets and things to help me with my work at different places, if I had a really long amount to add up, you know, a lot of the time, I made a spreadsheet and oftentimes I would enter it twice, you know, just to see if I got the same amount and see if everything was matching up that I put in. So there's ways of helping ensure your accuracy, and Lord only knows we need that. So, you know, a lot of times when you put your password in to a new password into a website, they'll have you put it in twice. You guys have encountered that, right? Why do you think that is? Because I want to make sure that you're keying in what you want, what you're wanting. Okay, so
I'll do this one here.
okay,
Yeah.
okay, that's fine. So if you don't want these, that's fine. But I'm going to give them to you, and I just want to make sure I've got all the accounts. I think I do, but you know, there's always a possibility that I missed something. So we're going to do transactions for a seller. Now, the name Summit, every time you see the name Summit in a transaction, that's representing the seller. Everybody good? Seller. Summit means seller. Anytime you see the name Beartooth, that's going to be the buyer. If you look down here at the bottom, you'll see the first four are all about the seller. And then the last four are all about the buyer. Okay, buyer, 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 buyer. And they've made the chart of accounts for both of these the exact same, except for one thing. Okay, so look real quick. I'm just going to go down here to the chart of accounts. So this says chart of accounts for Summit Company. So we got cash. We've got accounts receivable, Beartooth Company. So Beartooth is buying from Summit. Summit is going to sell to Beartooth. Okay. We got notes receivable. We've got inventory. We've got estimated returns inventory. We have office supplies, store supplies, prepaid insurance, land, store equipment. And then I have 12. So then you go to the next one. There's accumulated depreciation for the store equipment. Then there's another fixed asset, office equipment, accumulated depreciation for the office equipment. These two go together. This one goes with the last one on the page before. So store equipment, and then its accumulated depreciation is immediately on the next page. Okay, so I do want you to know they're there. So those are all the assets. Here comes the liabilities. We have accounts payable, salaries payable, sales tax payable. Yeah, here they are, 1, 2, 3, 4, 5. So customer refunds payable, notes payable. So 1, 2, 3, 4, 5. Then we have common stock. We have retained earnings. We have dividends. We have 2 revenue accounts. Sales, which is down here in the corner. Then you got to go to the next page, okay? Interest revenue. And I tried to put whether it has a debit normal balance or a credit normal balance to help you remember, right? Then we're starting in with our expenses. That's a pretty good amount of expenses there. Cost of goods sold, delivery expense, advertising expense, depreciation expense for the store equipment, depreciation expense for the office equipment, salaries expense, rent expense, insurance expense. And then the fourth one, I gotta scroll down. Then store supplies expense, office supplies expense, credit card expense, okay? And then miscellaneous and interest expense is on the next page. So we've got quite a few here, but those all repeat for the buyer, okay? So it just depends on what the transaction is as to which set of T accounts we're gonna start with, okay? So let's see if we can't get started here. All right, so we're in the month of August, okay? These are certain transactions in the month of August between the Summit Company and the Beartooth Company. Once again, Summit represents a seller. I thought that was pretty clever to put an S to represent a seller, and then Beartooth represents a buyer with a B, okay? Buyer with a B. All right, so let's see if we can refresh our memory while we're doing this. What the journal entries are when you have merchandise, okay? So the first one is going to be a selling transaction. So it says Summit Company sold. I thought I had a copy of that somewhere. Sometimes printing out your instructions helps, so you don't have so many screens. Sometimes you have too many screens to keep track of. It just drives you crazy, but I guess I must have left it. Oh, well, okay. Looks like we've got 1, 2, 3, 4, 5, 6, 7, 8, 9. We've got 9 transactions to take care of. No, we won't be using every one of these T accounts, but we've got them at the ready. And like I said, I just made those T accounts from their chart of accounts. All right, so if you're going to sell something, so it says Summit sold merchandise on account to Beartooth. The amount was $43,500. Okay, so let's go ahead and put $43,500. Now you might need to look at different amounts here. Just a second. What is going on? Oh, okay. So remember, okay, all right, $43,500. The terms are FOB destination. Say, what the heck's that? I don't remember. Well, let's look at what this says. So if the freight terms say FOB destination, then that's the seller's responsibility to pay the shipping, okay? If the seller pays, which isn't very often, usually it's FOB shipping point, which we're going to see next. If you look here, there's an FOB shipping point. So these are the 2 different FOB designations about the shipping, right? So shipping is just as much a part of the product that you're bringing in to sell as the product itself. Because if the product can't get to you, you can't sell it. Okay, so it's just as much shipping goes into inventory if you're the one buying it, right? So we're going to put the amount that they're saying here. All right, so for a sale, a seller has 4 accounts at least to work with. So they said that the sale came to $43,500. Then we want to go to our sales account. Okay, let me go to the sales account. That's at the bottom of page 2. And I'm going to put that in as a credit, $43,500. And if you want to, what I'm going to do, beside each one, I'm just going to put the first transaction. Okay, I'm going to put number 1 there. So I know that, oh, okay, that's 1/2 of number 1. And then back here on the AR account, I'm just going to put number 1. Notice the AR has blue bear tooth only, right? It's not the general accounts receivable. That name there with the accounts receivable is much more like what the real world is like. Okay. We don't run everybody's AR accounts together. No, because then we would never know who owes and who doesn't. So, all right. We've got the first part figured out. Now let's do the cost of the goods sold. By the way, FOB destination means that the seller will pay the shipping. And if the seller pays it, it's going to end up in an account called delivery expense. But we haven't been told yet. Here, just a minute. I think that's what's going to happen in our next date. The next part of any sales transaction that includes inventory is now to record the cost of the goods that were sold, right? Whatever we sell them for has to be more than the cost, or we're not going to have a profit. Okay, so here's the cost of what we're selling. So if you go to your third tab, you can put the cost. I'm going to put number 1 next to it because that's the first transaction. $29,330. Okay. And then the credit is going to go back to the first tab. The credit is going down in inventory. Okay. Because we're sending that to the seller. Okay. So these 4 amounts. Okay. So now I'm going to go down to the general journal. Here we are in the general journal. Let me make it a little more where you can see it better, I think. So we have this general journal to put these transactions in, and I should have made a copy of it. All right, back up. Sorry, one more time. Okay, August 1st, and I've got my amounts over here. So we're going to put a date in and then we're going to go figure it out. So let's go down to the general journal and put August 1st. Okay. And then what's going to get debited first? The first thing is going to be accounts receivable. Probably bear tooth. And if you don't want to type it all out, then leave your chart of accounts open. Okay. And then we'll get, and make sure you're looking at the sellers, because the seller is the only thing that's different is the AR says bear tooth and the buyer, the AP says Summit. Okay, so we want accounts receivable bear tooth to be the debit, our first debit. It's fussing at me already because I didn't put it in right. Okay, there it is. There it is. Accounts receivable bear tooth company. So we're going to put $43,500. And then you can I would just type in sales. Okay, sales is going to be the credit of that same amount. Okay. And I can't remember if we need another date, but I think we do. Let's go August 1st. And now we're going to put cost of goods sold. Okay. Let's see here. Cost of goods sold. There. The cost of goods sold, if I forgot what I put in, then I just go find it in my T accounts, 29,330. That's gonna get a debit, 29,330. And then the credit goes to inventory because we're sending the inventory out. Okay, sometimes inventory is called merchandise inventory, but I've got a credit there in the T account, you see there. All right, so that's the first sale. And let's just check our work. I don't know where we're at, if it'll even tell us. We may have to complete this journal before it'll really give us some feedback of what we've done. Okay. And by the way, the sale that they just made, when Summit sold to Beartooth, here's how long Beartooth has to pay it. In and 15. So you say, what's that mean? That means the whole invoice, there's no discount, must be paid once they've received it in 15 days. Okay? So whenever you see these funky looking fractions or whatever you want to call it, that has to do with the credit terms. Okay, that has to do with the credit terms. If it says in, that means the whole invoice, there's no discount. And I'm trying to see if we have a discount. There's in 45, paid freight. I don't know if I see a discount on any of this. I don't think so. I don't think so. So that's good news because you got to keep track of discounts and how long it took for somebody to pay it, this and that. All right. So I think we've just knocked out the first transaction. Let's go and put in the next date. Okay. I want to print this. I'll show you how you can print it. If you ever want to print it, if you have a printer at home, here's how I do it. Right? I copy that and highlight it and click print. And then I'm going to print it. And that's the Find Me printer out here beside that wall. Okay, so I might go get a hold of that, but the next date is August 2nd. Okay, August 2nd, right here. So you should be on line 5 now. August 2nd. Okay, now let's read it. I think it's another seller, right? It's another seller transaction. So it says Summit Company paid the freight of $1,110 for delivery of merchandise sold to Beartooth on August 1st. Was it their responsibility to pay it? Can anybody tell me? Was it Summit's responsibility to pay it? How would you know? Because of this term right here. If that's the term in the purchase, in the sale, then that says that the seller should pay the shipping. Now, so yes, it is the seller's responsibility to pay that $1,110. We are not supposed to charge the buyer for that. Are you with me? So how we're going to take care of it is we're going to debit something called delivery expense. Delivery expense. If you look at the third tab, you should see delivery expense at the top. Okay, so this is transaction 2. And we're going to put $1,110 in delivery expense. And they said we paid it. If we're going to pay it, then cash goes down by that same amount. Okay, so the same amount. So $1,110 is going to go down in cash for that delivery, for that freight, where the where the sale had FOB destination, okay, FOB destination. Now, sometimes the seller will pay the freight that really the buyer is supposed to pay them back for. So if this would have said FOB shipping point, then Summit may have paid the freight, but they would have turned around and added that freight amount to the invoice of Beartooth, so that Beartooth would pay them back. Are you with me? So very rarely do you see a seller have to pay the shipping, because 9 times out of 10, they'll hide it in your invoice anyway. So I guess they figure, why not just have the buyer pay for it? And that all has to do with when something is shipped. Anytime merchandise is shipping somewhere, it belongs to somebody, right? So they have to know when title passes. So the title will pass to that merchandise of that first one at the destination. So it belongs to the seller all the way to the door of the buyer, right? But if it's shipping point, that title of that merchandise actually transfers to the buyer at the shipping point. Are you with me? That's why it's called that. That's why it's called destination and shipping point. That's when transfer of ownership of that stuff passes to the buyer or the seller. Because you say, well, what if the trucking company has a wreck and it gets damaged? Well, they've got insurance, hopefully, to cover whatever might happen in that way. But it's never really the trucking company's stuff, okay? They're just shipping it from point A to point B. So let's go ahead now and put in this payment. We've got August 2nd already listed, so we're going to put delivery expense from the seller, right? And it was $1,110. So you might need to look at what yours is. And we paid cash. And there is August 2nd. So these two had to do with the seller. Okay? These two had to do with the seller. So the next one is, okay, here comes another one. Okay, here, the first three are all about the seller. So the August 5th, let's put that into our journal. August 5th. So we know what date it is. All right, this is another sale. And they're selling to Beartooth again. All right, so it says that the Summit Company sold merchandise on account to Beartooth for $69,400. Okay, so just like we did for the first one, they're buying it on account. So this transaction is number 3. It's $69,400. Let's put the credit in the sales account, which should be on your second page of T accounts. And we're going to match it, right? 69,400. This is transaction 3. Okay. And then notice FOB shipping point. So the freight terms have changed. We'll address this here in a minute. What we need to do now is put in the cost of what we sold. Okay. Cost of goods sold is on page 3. And once again, this is still part of the third transaction. So the cost of what we sold then was $42,440. And the offsetting credit goes to inventory because we're making inventory go down. $42,440 from transaction 3. So let's see if we can't put this in with a little help from our T accounts. So the first one is accounts receivable. Okay, so we can borrow this account title right here that we just put in, and that's going to be the debit. Yep. And once again, it's $69,400. Then we're going to credit sales for the sales amount. Okay, let's put August 5th again. And this time, we're gonna put cost of goods sold. Cost of goods sold. And it is $42,440, and then the offset or the credit goes to inventory. Okay, because we're making inventory go down for the merchandise that we're selling to Beartooth. Okay, everybody, anybody need me to help understand what's going on? Now let's go back up to the freight terms, because now they've switched. So the second transaction or the second sale to Beartooth is FOB shipping point. And by the way, this invoice is due when? The whole thing is due EOM. Anybody know what EOM stands for? End of month. Yep. Yep. Accounting loves to use little acronyms that they never tell anybody what they mean. But I'm here to try to help with that. All right, so then August 9th, okay, Beartooth paid freight of $2,310 on August 5th, purchase from Summit Company. So Beartooth, this is going to be a transaction from the buyer's point of view. All right, so you're going to have to go over to the buyer's T accounts. I've got 4 of those because they pretty much match. So make sure you're looking at buyer when you see Beartooth. When you see Beartooth as that's the one with the transaction. All right, so we're going to pay the freight. If you pay something, down goes cash. Okay, down goes cash. I'm going to make my cash go down first. So 2310, and I'm going to put, this is actually transaction number 4 on the list. Okay, transaction number 4. And when we do that, because we are the buyer, okay, we are going to include that in our inventory. Yep, because we have to pay for the shipping. So the debit's going to go to inventory and the credit's going to go to cash. Okay, so this is August 9th. And I think I haven't put that in yet. August 9th. So we're going to put inventory, and this is from the buyer's point of view, right? Of 2,310 is mine. And then the credit is going to go in cash, yeah, because we're paying for it, right? So we're sending the shipping company their money. Maybe we're sending it with a debit card or something, right? So this is the buyer here. All these up here are the seller. So the first 10 lines should be a seller. 11 and 12 should be for the buyer. Everybody good with that? Okay, let's look at our next date then. So after the 9th, we have August 15th, and we're back to the seller. Okay, we're back to the seller. So I'm going to put August 15th in it, and then I'm going to read it. So let's put August 15th. And this is going to be a seller transaction. So I want to go back to my T accounts over here with the seller. And I would line up the T accounts if you're going to use them online or on your laptop. I would line up what T accounts you're going to work with before you get started. Okay, because that way you don't get confused. Because you're pretty much doing the accounting for both companies right now. Okay, so I would say you got to put your seller hat on or your buyer hat on. Which one are you? Who's more complicated? The seller.
Can you check your work, please?
Yes, is
Just so
something wrong?
No, I just want to make sure I'm up to the,
Me too. I'm hoping I can,
or maybe it will show.
but I don't think it's going to show until we get done. And I'm sorry about that. I wish it wouldn't do that.
Can you scroll over to the right to see your score?
Yep. Okay. I hadn't looked at that yet. I got 138 out of 326.
Okay, perfect, thank you.
Is that-
Yeah,
Or 27.52 out of 65. Now, why would they put two different numbers? And those points don't have anything to do with what we're doing as far as your points are concerned. We only use those points to know if we got everything we could. All right, good job. Okay. So now we're going to do another selling transaction. Okay, so another selling transaction. So Summit, and this is August 15th. Summit Company sold merchandise on account to Beartooth, this time for $61,000 worth of the sale. FOB shipping point again, they get 45 days to pay their invoice, but Summit is going to write a check to the freight company, but add the amount of the freight to the invoice of Beartooth, because some freight companies won't do anything until they have a check in their hand. Yeah. So, and then we have the amount of the cost of the goods that we sold. So let's take one thing at a time, So, all right, so this is number 1, 2, 3, 4, 5. This is number 5. Okay. Invoice number 5, or transaction number 5. So here's the sellers. So this is going to go into accounts receivable Beartooth for $61,000. And then we're going to credit sales for $61,000 for transaction 5. Okay, and then here's what we're going to do. The other part of 5 is to put the amount of the shipping in with the AR, right? So AR is going to have another number 5. This is for the shipping, and I'm just doing it in the order they're giving it to us. $1,555. What's going to offset this debit is a credit to cash, because they're going to pay the shipper, but then they're going to turn around and put it on the invoice of Beartooth, so Beartooth will pay them back. Okay, so the best way to do that is just to get it done when they say it, right? And then the last piece of this is the cost of the goods that we sold. So then we want to go to the third tab for the seller. So the cost of the goods that we're selling has to be less than what we're selling it for. So it is $37,780. So you look at what yours says. And then the offset credit to that amount goes back to page 1, and it goes down in inventory, right? Because we're selling Beartooth something. And this is transaction 5. So transaction 5 actually affected 6 different accounts. So I usually try to take 2 at a time if they're going to equal each other. So now let's put this in. Okay, now let's put this in. So August 15th, we're just using accounts receivable Beartooth. Now we are going to use that twice. I wouldn't combine them, but if we get something wrong, we might have needed to combine them, but I don't think so. Because if you combine the sale and the freight together, nobody's ever going to know that the freight was in there. So to me, it's worth separating them. And I hope that Cengage thinks so too. If I was doing this accounting, this is exactly how I would do it. Okay, so we've got 61,000 going into accounts receivable, and then we're crediting sales for the same amount. Okay, and then we're using accounts receivable again for the freight amount, because they're going to pay us back $1,555, and then down goes cash for the money we sent with the driver of the truck. And then now, how about the cost of goods sold? I'm sorry, we probably do need another date here, I think, but I have not done this problem. So I'm kind of going, All right, hopefully this is how they want it. So now then, the last piece of August 15th is to record the cost of the goods sold, cost of goods sold. So the cost is what you actually made inventory go down, or if you wanted to look at the cost of goods sold account, you could see it there. And then the last piece is a credit to inventory to make it go down, 37,780. So once again, August 15th actually had 3 sets of journal entries, and I would just keep them just like that. And I'm hoping that Cengage agrees. Otherwise, we're going to have to go back and fix a few things. So let's go ahead and see what Daniel wanted us to do. When I hit check your work, I'm now at 4187. But I don't know if I've missed anything. 210 out of 326. So I would just still have to wait. We don't have too much more though. Okay, let's go back. And we are now beyond August 15th. So the seller has made 3 sales to the buyer, which is Beartooth, right? Now Beartooth is going to start paying for things, right? So on August 16th, Beartooth is going to pay Summit for the purchase of August 1st. Okay, for the purchase of August 1st. So I'm going to go over here to Beartooth's T accounts. Okay, and we're going to pay. So the first one we did was a sale of 43,500. There's no discount involved. So that's the amount that Beartooth is going to need to pay for August 16th. So here's the buyer. Okay, and this is, bless you, this is 1, 2, 3, 4, 5, 6. This is the 6th transaction. So far we've only had one other transaction as the buyer. But now let's go ahead and put, all right, so we're going to pay for that first invoice, which is 43,500. There it is in cash. Okay, now when we pay this, see, now I didn't do the flip side of this in the accounts. So really we should, I guess, but we're not recording it. No, I'm just putting it in as I'm expecting it. So paying for the invoice, we're going to make cash go down, and then we need to go to accounts payable. Okay, accounts payable. Now we didn't record. See how that says AP Summit? So really and truly, if we would have been making the entries for this, now wait a minute. Let me make sure that I'm not missing something. Are there 2 journals? Oh, this is just for who? Look,
So
I screwed up. I have screwed up. So what we need to do, and I'm sorry that I didn't see that. Yes, we have one for Bear down here. Are you with me? So, okay, I'm going, what is happening? So now I get it. I'm sorry. Let's kind of start over, but not, okay. So let's go back. Let's go back. It's all right. We're good. The first entry is good. Okay. The second entry is good. And the third entry is good on Summit. Make sure you take out. Okay. So, I'm so sorry about that. Okay. I had to caught on to that because it wasn't making sense to me. And now it's starting to make sense. Okay. So accounts receivable, Beartooth. So we, for every one of these entries, right, we need to do a counter entry for Beartooth, I believe, right? So if you make a sale, right, that's fine to put it in. So I need to take out anything that was Beartooth, right? So hang on, let me go back. So cash going down. This one, so take out August 9th, okay, get rid of that. Out of Summit, because that doesn't go there. Sorry about that. Okay, and I think that's it, because I was just getting ready. So now, let's go ahead and take out of here in the T accounts for the buyer. Okay, let's just take them out because we're actually going to have, for every transaction that the seller did, we've got to counter transaction it from the buyer's point of view. So we're good with the seller, but we've just got to get good with the buyer now. Okay, so let's go back. So we'll do the seller first. So let's go back and refresh our memory a minute with what we did. All right, so the very first transaction was a sale to Beartooth of $43,500. And then we put a credit to sales. We did a cost of goods sold debit of $29,330 and inventory. I didn't put inventory here. Okay, inventory went down by the cost of what we sold. Then August 2nd, okay, so now we're going to go to Beartooth and do August 1st. Everybody okay? So let's go to Beartooth. Let's go to the buyer. So when a buyer, okay, so it's a much shorter transaction, okay, and we're going to do that journal entry down here. So go to the buyer journal entry page and put August 1st. Okay, so maybe this will help now. All right, so what did we do? We have inventory coming, right? So inventory is going to go up by $43,500, and this is from the buyer's point of view. Okay, and when we put this in, then we need to credit accounts payable, which is right here, of $43,500, and that's transaction 1. Okay, so transaction 1 is inventory. Okay, because they're the ones buying it, it's going to go in there on their books. And then we need to go get accounts payable Summit, which is on the chart of accounts for the buyer. Okay, accounts payable Summit, and it should be the second chart of accounts right here. Okay, woo, I was wondering what was going on. Okay, that's all right. We're going to put that in, and of course we need a credit for the same amount. So that took care of August 1st with the sale, right? Okay. So then when we go back and reread what we've got going on, the second piece is the seller paying the freight. So August 2nd, do we do anything as the buyer? No. August 2nd, there's nothing for us to do because it was not our responsibility to pay shipping. That was just the seller only entry. Okay, so let's go to 5 now. Now here comes another sale. So once again, I'm going to audit what I did so I don't get any further in trouble. So August 2nd was the second entry, and we paid cash of $1,110, and we reported it in the delivery expense. And then the first journal shows delivery expense and cash going down, so that's fine. Then the third transaction shows a sale to Beartooth of $69,400 and a sale and the cost of what they sold and the inventory. So now from Beartooth's point of view, we're going to go to their T accounts now. And That second sale was inventory going up, and actually this is the third transaction. The third transaction in the list. Okay, got one list. We're supposed to understand both sides of this. So $69,400 goes in inventory. And then we want to record it in the Summit Company's, so 69,400 for August 5th. So scroll down to the buyer's general journal. And this is August 5th for another sale. So we can basically follow what we did there, but it's just a different amount. $69,400 and accounts payable Summit. See what I mean by the buyer's entries are a little more simple, right? Yep. Okay, so there's August 5th. Okay. All right. Let's see what's next. I think we better get this stuff out of here, but I think this is going to go next. So all we may have to do is just bring this up one row, one set of rows. So, okay, we just did August 5th from both sides. August 5th. Okay, now Beartooth paid the freight. Now this one is going to be a buyer's entry only on August 9th. Okay, so go down to Beartooth General Journal and put August 9th as the next one because they're going to have to pay the shipping outright. Okay, so then this is going to be inventory, which is the amount of the shipping. If you're the buyer, you put your shipping amount into your inventory account. So, I should have printed that. I'm sure doing a lot of scrolling here. Okay. So this is number 4 transaction. Just like number 2 transaction was seller only, number 4 is buyer only. So number 4 means we're going to take the freight from August 9th, which is 2310, and we're going to put that amount in inventory. Okay, and they say we pay it. So when we debit inventory, we're going to credit cash for 2310, and that's number 4. So once again, we're going down to the general journal of the buyer. We're going to put inventory in. Whoop. Hello. Okay, 2310, and we're going to pay that in cash. Okay, 2310. Okay, so that takes care of 4 of the entries now. Now we're ready for number 5. Number 5 is another sale. Okay, another sale by the Summit Company. So what you have left in your general journal here just needs to be brought up. Can you do that? Okay, so I'm just gonna fill in what I see here. So all of these are going to be August 15th. Okay, and I'm just going to use what I see here. So copy and bring that up. And then type in sales. If you leave the one below it available, then you'll be able to see what it was. So 61,000. And the sale is 61,000. Okay, and then we want accounts receivable Beartooth again, but this time for the amount of the shipping. So we're just going to put in $1,555. And this is going to be cash. Okay, so once again, this is going to be for the seller who is paying the shipping, but invoicing the buyer for it. Whoop, okay. So then this last one needs to be cost of goods sold. I think you're supposed to be able to highlight this. Let me see. I don't know, it makes me nervous. Putting them like that. I just assume fix it this way. So anyway, I'm gonna type in cost of goods sold. This is line 15 on the seller's general journal. Seller. Okay, so cost of goods sold. And the amount I got for my problem. Okay, and then we want inventory, and then I'm just gonna delete what I see in 17 and 18. Okay, so. Okay, so bye-bye. So we don't want this in 17, line 17 and line 18. Because that's gonna be something else. Now we need to go to the buyer's point of view, right? Okay, so now let's go to the buyer's T accounts. Because we've got the seller, let's just double check I got the seller in right, one more time. This sale right here is $61,000. And I debited accounts receivable for $61,000. But then I credited sales. Yeah, here's my sales down here in the corner, $61,000. Okay, and then I debited the AR for Beartooth of $1,555 for the freight. And then I credited cash $1,555 for the check I sent with the freight driver. And then we're putting in the cost of goods sold, $37,780, and making inventory go down. So cost of goods sold is on the third one. So it is transaction 5, $37,780. And then inventory is going down. And once again, this is from the seller's point of view. I'm just double checking that I put things where it goes because I didn't do very well. Okay, seller looks pretty good. Let's go down to the buyer now and put August 15th. Okay, so what just happened? So go to the buyer's T accounts now. Okay, buyer's T account. How much did we get? This is transaction number 5. Okay, so if you forget, it's all right. If you forget, we need, and I don't know whether it's combined or not, but I'm not going to combine it at first. I'm going to put 61,000 in inventory because that's how much we sold them. And then I'm going to put this much in inventory also, and then all of that's going to accounts payable. So here's what I'm going to do. I'll see if it's right. So inventory, this is from the buyer's point of view, is going to get $61,000. So I'm going to match that with a credit to accounts payable of $61,000. And that is from transaction 5. Okay. That took care of, and then now we want to do that again. We want to go back to accounts receivable and put in 5 and 1,555. And then that's going to go in the payable as well, because we've got to pay them back for that. And this is number 5. And I think we're okay. So we're going to make 2 entries. We'll see if we get in trouble. So this is the seller. So I want to go to the buyer. Got to make sure you're on the right one. So inventory is going to go up for the $61,000 of the merchandise, and it's going to go in accounts payable. And then I'm going to do another one. I'm going to do the freight separately and see if they agree, but it's still going in inventory. If I put freight on here, it'll count me wrong, but I would still record it separate because that way, you know, one was product and one was shipping. Okay, so then we need to credit $1,555. Now let's test it. Okay, we just completed August 15th from both sides. Okay, so let's just see where we're at after we're done with August 15th, as far as I know. Okay, if we have to fix something, we will. If we have to fix something, it'll probably be combining these into one. Do you understand? Because when we would get the invoice mailed to us, we might put that whole invoice in as one. I just don't know. But I've kept them separate just to see where they're gonna go with it. But if that's wrong, we'll fix it. Okay? I think we have exactly enough lines for everything we're supposed to do. All right, so now we're ready for transaction 6, for heaven's sake. Okay. Geez. Transaction 6. So now it's August 16th. So Beartooth now is going to pay Summit. So for the 16th, we have to show that being paid from Bear. Very good. But then we have to show it being received from Summit. So let's take care of whichever one they talk about first. So let's take care of the buyer paying the first sale. So if you go look at the buyer's T accounts, right? Or when you go look at accounts payable, here's the first account we need to pay. That's the amount we need to pay. So we're going to make accounts payable go down by 43,500, and this is going to be transaction 6. Transaction 6. So then back to cash. Okay, back to cash, because we got to pay that. Okay, and so $43,500 down in cash from the buyer, right? So this is transaction 6. Now let's put that in the general journal, the buyer's general journal. Let's put that in. So we are looking at, well, my brain just does not want to remember anything. Okay. 16th, August 16th is when we're paying the, when the buyer is paying for that. Okay, August 16th for that first one, right? This first one right here. Does everybody see this? I don't know where I was going to get my numbers, but anyway, August 16th, we are going to make accounts payable to Summit go down. Okay, by that first amount of that sale, which is 43,500. And then we're going to make cash go down 43,500. Okay, so that's from the buyer's point of view. Now let's go up here to the seller. When the buyer pays the seller, let's show that in here. So now it's August 16th. And we're going to show August 16th here. And here comes cash, right? Yep, here comes cash from who? Beartooth. So there we're getting that cash of $43,500. And I'm skipping a step. So hang on. Let's go look at it from the seller's point of view. So you go look at the seller's point of view. And how many sales have we made to Bear? We've actually made 3. So there's the first one. So when the first one gets paid, we need to show that going down, right? In accounts receivable, that is transaction 6. And right next to it is cash. And this is the seller's first receipt of cash in our problem. So the seller is receiving that. So cash is going to go up for 43,500. And the AR for Beartooth is going to go down because they're paying us the first sale we made. Okay, paying us for this first sale we made. So that sale is gone, or that AR is gone. Does everybody see that on my T account? This little sale here has been paid, right? So we have this and this left. To be expected from Beartooth, right? Okay, so I think we took care of the 16th from both sides of things. Okay, now we are ready. Summit Company paid Beartooth a cash refund of $1,000 for defective merchandise purchased on August 1st. Beartooth kept the merchandise. Okay, so who's in action at first? It's the seller. If the seller pays something to Bear, that means cash is going to go down. Okay, so let's try to start. So we're the seller. Okay, cash is going to go down. So we're going to send Beartooth $1,000. Now remember, this is from August 1st. August 1st sale has been paid for in full. Is everybody good with that? Yep. So there's not any adjustment to any invoice or anything like that. It's just money back to them. And they're not bringing us that merchandise. They're just keeping it. Okay. If they were going to bring it back to us, we would put it back in the account. So let's kind of try to figure out what we're going to do here. So we're paying cash. So down goes cash from the seller's point of view. And this is number 7. Okay, number 7, I think. 7, 8, 9. Yeah. So number 7. And what are we going to do with that? Let's go to this. It's called customer refunds payable. Okay, we're gonna make the cash go down, but the offset is going to be a debit to this customer refunds payable because we had to refund a customer for something, right? The only thing we're not doing, there's a second part of that. If they actually send the merchandise back, we will actually put it back in the regular inventory, however much it's worth, and we'll actually use this estimated inventory if we would have gotten the merchandise back, but that's not the case. Okay, so they're trying to keep you from having to do so much. All right, so let's do this from the seller's point of view. Okay, so the seller's point of view. This is all right. So this is August 20th. Okay, for both sides, August 20th. So the seller is going to prepare the check and we're going to debit that customer refunds payable. Customer refunds payable. Okay. And down goes cash for what we're sending them. Okay. So I think that's okay. Now let's go down to the buyer. The buyer is getting some money back, right? The buyer, so now this is August 20th from the buyer's point of view. So let's go look at their T accounts. Let's go to the buyer's first T account. They're going to get cash. Okay, this is transaction 7. So here comes a check into their account, right? And where have we been putting all of the stuff we're buying from Summit? We've been putting it in inventory, have we not? So if we're getting a refund for something that was defective, we're probably going to throw it away. So we can't sell it, but we're going to take the 1,000 out of inventory because there's $1,000 worth of inventory that's no good, right? And we have to offset that $1,000 debit when we get that check. You're with me? So we want to debit to cash for the refund. And this is from the buyer's point of view. And then we want to make inventory. We don't want that in our inventory because it's defective, right? And we just we're being paid, we're being refunded for that. Okay, so that should take care of August 20th for both sides. Okay, back to the seller. Okay, so let's read the 8th transaction here and see what's going on. So now we're at August 31st. Okay, the buyer is going to pay for the purchase on August 5th. Okay, so the buyer's going to pay it, but Summit is going to receive that payment. All right, so let's go to the buyer's T accounts first. They're the ones that are basically starting this transaction off. So now they're going to pay Summit. So our second purchase was $69,400. Okay, so we're going to pay Summit for the 8th transaction. $69,400 goes down in cash. And we want to go to the accounts payable. Okay, accounts payable is going to get a debit, okay, of $69,400. Okay, so now let's go to Beartooth's General Journal, and this is going to be August 31st. Okay, and it looks like this is the last entry for the buyer. I hope that's the case. Ooh, I missed one right here. Sorry about that. Okay, that was paying that. Okay, so now we're paying for the second one. So the second, so we want accounts payable Summit. Yep. So that's whose account is going down. And that is $69,400. And then cash is going down. $69,400. Now, if we end up with another buyer entry, guys, then we're going to probably have to combine these two and bring everything up. So I don't really know where we stand with that. But now let's go to the seller's point of view for this payment that the buyer is making, right? So here comes cash. So this is inventory. So this is the seller's point of view, $69,400. And we make accounts receivable go down $69,400 because they're paying us that. Okay, so we want a debit to cash, but we got to go to the General Journal for the seller. And this is the August 31st. So cash is coming in $69,400, and we're going to credit their account for what they're paying for. There is that. Let's see what happens. Let's check our work, see where we're at here. Okay, I got 275 out of 326 after the 8th transaction. Looks like I've got 4 more lines from the seller's point of view, and I'm out of lines from, so guess what? We need to combine those. So I'm sorry, but we'll fix it. Let's go ahead and finish. And let's go ahead and finish what we got, and then we'll fix this. Okay, we'll fix it. So, all right, let's see what else we got. So the last transaction probably has something to do with the buyer and the seller. That's okay. All right, Summit issued a credit memo. So this is something from Summit. This is coming from the seller's point of view. So look at your seller's T accounts. It's a credit memo for merchandise with an invoice amount of $4,000 that was returned from the August 15th sale. So the August 15th sale is sitting here in AR and it hasn't been paid yet. Okay, but we're sending a credit memo because Bear sent back the merchandise because it says the cost of the merchandise was returned, right? So we need to issue a credit memo. Now, we're not sending them cash as the seller. No, not like we did that time before. What we're gonna do is credit their accounts receivable to bring it down that $4,000 because that last sale has not been paid yet. That last invoice, okay? Ooh, so here we go. Here we go. Here we go. Let's do what it says. So from Summit's point of view, down goes AR for that credit memo. That's what they're saying. Credit the customer's account. Okay, when we do, this is the 9th transaction, then we're going to put the debit in the customer refunds payable. That's going to be the debit of $4,000. So go to your customer refunds payable. This is number 9 for $4,000. Okay, why do we want to keep track of the refunds we make to customers? Anybody need to know? We could just go into the sales account and subtract it there and just say, well, it really wasn't a sale. Well, if you do that, you never have any idea of how much refunding is going on, right? Maybe we've got some defective product. Maybe we need to get a hold of our supplier and say, hey, the stuff that we're selling of yours is turning out to be defective or whatever. So we want to keep track of what we are actually refunding. Okay, so that's the deal. So that's what's going to happen now, since they sent back the merchandise. Okay, they sent it back and its cost was $2,200. Then we need to go to inventory. Okay, and we're going to put $2,200 back in inventory. And this is the seller. Okay, even though we may send that back to the supplier later, we want to make sure that we've accounted for that return. So when that return happens, then we go to the estimated returns inventory and put a credit in here. Now that, I know this is hard to get, but once again, that inventory came back. We're going to put it back in inventory and then credit estimated returns inventory. All right, so that's what we're going to need to do from the seller's point of view. So let's go ahead and do that first, just so we've got that done. Okay, and this is August 31st. So let's see if we can follow what I just said. So we're going to use customer refunds payable. For that credit memo of $4,000. And just like it says, we're going to credit that customer's account, right? We're going to credit accounts receivable thereto because they sent us back something that they didn't want or it was defective or whatever. And then we're going to put the item back in inventory because we received it back. So it's going back in the regular inventory account, which is where it came out of, 2,200. The offsetting credit is going to go into that estimated returns inventory. And if you don't understand, it's okay. It's okay. This can be very mind-boggling. Okay. All you know is that regular inventory went back up for what they brought in. Okay, that has to be a debit. So we're going to credit estimated returns inventory, and this is the seller. So we want to make sure we're looking at the seller's chart of accounts. So estimated returns inventory actually is an asset. So we're going to use that title as the last line on 26 for that. Okay, let's see what happens. Hey, we got our green checkies. right? We just gotta go fix old there too. So what we did was not wrong. It just was a difference of opinion of an accountant that said, well, let's just combine both of those. Okay, actually, they're just putting in, the buyer is actually putting in what the invoice is saying, and the invoice is going to say, here's all you owe us. Okay, so here's what I would suggest. Here's what we're gonna do to fix this. Go to the buyer, because then we've got one more entry down below to account for that credit memo and the stuff we sent back. So here's what you want. We want inventory, that's fine. But now change that amount. We're gonna combine these two. So whatever two you had sitting here, so I'm gonna have $62,555 going here. Okay, so you'll want to put that in, however much yours is. And then that's how much the accounts payable will then go down. Okay, and then we just need to bring all these up. And it usually works out better if you leave down below what you need. So I'm gonna just borrow this and put this in. And like I said, I think you can move it, but I'm not real keen on that yet. So anyway, so 43,500, and then this is gonna be cash going down because of the payments from the buyer. So I'm keeping what I need right below, so I have that information ready to put in. Okay, so the next one is gonna be August, so on line 11, we're gonna have August 20th. Okay, and we're gonna need cash. And that's the cash that came in for that refund of the stuff we didn't send back. By the way, a lot of stores are doing that now. I was gonna return a Halloween costume to Sam's that cost 40 some dollars. And I went to send it back and they said, we'll refund your money, just keep the costume too. What? Just keep the costume too and I get my money back? Yep. So sometimes it's more of a hassle to take back in the inventory than just to pay them their money and move on, right? Okay, so we're gonna have, here's how it's gonna look when we're fixing these, because I didn't combine them like we should have. All right, so this is August 31st. This is from the buyer's point of view. This is 69,400. And this is 69,000. And then this is going to be clear, so we can put in our last entry from buyer's point of view, right? From the buyer's point of view. So let's see if we can't work this out. So $4,000 worth of merchandise went back to the seller, right? So the buyer's inventory is going to go down. So now go over to the buyer's T accounts right here. So when we sent that back, we are sending back $4,000 worth. That's how much we paid for it. Okay. By the way, the buyer doesn't ever see the cost of goods sold from the seller. Does everybody understand that? I used to kind of get that confused, but the buyer it's none of the buyer's business how much the cost of the goods were sold from the seller. All right. So we're going to make inventory go down by $4,000 for that credit memo from the buyer's point of view, and that's transaction 9. And then we're going to the accounts payable that we have to Summit and make it go down. Okay, we're gonna make it go down because inventory goes down with a credit. And so does accounts payable because we don't owe them for this 4,000 because we sent it back, right? We don't owe for this 4,000. We sent it back. So now when they're not making us do it, but if we were to pay for this, okay, and this is combined now. Remember, I have this really should be, let me combine this. This really should be 62,555. This is from the buyer's point of view because it doesn't have that second piece, right? And then, okay, so then when they pay for this invoice, this is the buyer, they're not making us do it, but when they do, that will actually be reduced $4,000 and they'll pay the difference. Okay, so I don't know if that helps or not, but they're not making us do this. We are accounting for the credit memo from the buyer's point of view. One more time. We're going to make accounts payable go down because we sent it back. Okay, so we don't owe them for that. Okay, so $4,000. And then we're going to make that go down in inventory because that was bought for inventory, but because we're sending it back, it's no longer in the buyer's inventory. Okay, so down it goes. Woo! Did we get it? Uh-oh, what did I do? Hold on. Hold on. What did I do? I think that should be cash. Yeah, that should be cash. Sorry about that. Okay, this is from the buyer because they're paying that second sale, the invoice. So that should be cash. And I even have it right here in my T accounts, but I wasn't paying attention. So now I think we're okay. Does anybody have any questions?
Yes, can you keep it there, please?
Yes. Here's what I would suggest you do. Even if you don't have your numbers quite right, I would go in and make the accounts match, right? What you're doing here. Okay? So where are you? Is there something I can help or do you just need to focus?
I mean, I don't know if it's just me, but I have different members than you do.
Right,
So,
right. So this is the buyer. Which one are you off? Buyer or seller or both?
I'm just only on the debits and credits.
Of the buyer or the seller?
Would be the buyer, I believe.
Okay, and that's the one I screwed up on, which I'm not surprised that you are having troubles. Here's how you know. This is the General Journal Beartooth.
Yeah,
Okay, so this is the one you're getting the red.
correct.
Okay, so let's just walk it out. Okay, so where is your red showing up?
From 9 to 14,
9 to 14.
just the debits and credits.
Just the debits and the credits.
Yeah,
Okay, are your debit and credit in 7-8 okay? Where you combine those two amounts that we did?
yes.
Good. Okay, so now, this is paying the very first invoice. So if you look at the buyer's T accounts, I don't know if you've been keeping those, but the buyer, however much the first sale was, they should be paying in cash that first sale, right? Mine was 43,500. What's your first sale? First sale on the list.
Actually, I might have it.
You might have it. Okay,
yes.
I'll give you a chance to look.
Sorry.
No. It's good. How about you guys?
Okay, I'm good. I
Okay,
got it.
you got it. That didn't take much.
I just had to plug in some pieces.
That's all right. That's all right. That's how we, making mistakes actually kind of teaches you more anyway, So once again, I apologize that I didn't do very well on the buyer's point of view for that darn FOB shipping freight thing, but I did okay with the seller. The seller separated it out. Do you see that? remember, here's where I'm making this sale. Everybody look at the seller's journal entries here, real quick, just for, So from the seller's point of view, they really want to keep this separate because they want to know what their stuff was, right? They really want, so here's where I'm at. I'm looking at this one, and this one. These three here all were about that transaction on the 15th. And what happened here, to refresh your memory, is we sold a certain amount to Beartooth and we recorded it in our sales, and then we paid the shipping and put it in their accounts receivable, and then we actually paid it. We paid that shipping with cash, but we put it in their AR so they would reimburse us because it was their responsibility because of the freight terms being FOB shipping point, right? The first FOB shipping point, Beartooth paid the freight directly. So yeah, that's even easier. But when the seller pays it for the buyer, which happens, I think, more than anything else, because here's the shipping company at the seller's door saying, okay, we're not going anywhere until you give us a check. Okay, and I know there's some shipping companies that are like that. They don't want to leave without a payment. Yeah. So what's the seller going to do? Well, seller's going to go ahead and pay it, but then basically make the buyer pay him back, basically. Okay. And then the third part, the third part of this transaction as a seller is putting in the cost of what was sold. Notice a seller puts in costs of what was sold because they want to keep track of the cost of what they sold versus the revenue. The difference between revenue and cost of goods sold is some profit, right? It's some profit. But from a buyer's point of view, they don't care anything about the seller's profit. They just want to show how much they paid for something, right? So do you see what I mean about the buyer's entry being a little more simple? Okay, that you don't have to worry about cost of goods sold, any of that, right? You're just buying. So once again, seller entries are a little more complicated, especially if stuff is sent back. What are you going to do with it? I have not done this problem, but I really like it. I really like it because they gave several different scenarios. They gave a return that they didn't return the stuff. They just refunded the money. Then they did one where they did return the items. And not only because the invoice hadn't been paid yet, that's what matters too. If the invoice has been paid, then the seller's got to pay the buyer back. If the invoice hasn't been paid from a sale, then the seller can just credit the account and make the invoice less money. Okay, so it just kind of depends. Okay, let's take about a 10-minute break. Can we do that? Okay, I'm going to stop the video and then I'm going to give you some good guidance over the next problem. I'm not going to do it just verbatim. All right, so okay, let me stop the video. Okay, Zoomers, if you're still out there with us. Still out there with us, Jonathan and Barry are. Okay, I have to end this in order to stop the recording, but then I'm going to go right back in. Okay, so we're going to take a break till about 6:15 and come in and do the rest. So I'll be right back.